We think that's a global autonomous taxi platform opportunity, and we think it's going to submit to natural geographic monopolies. Tesla certainly in the United States and perhaps elsewhere. So you're going to be surprised at seeing who's going to, many people think it's just hardware and software stocks widely advertised, but Tesla, many people think is an auto stock. We don't. We think it's much more than that, but we think it's one of the biggest AI opportunities out there.
Tesla, many people think, is an auto stock. We don't. We think it's much more than that, but we think it's one of the biggest AI opportunities out there, star investor Cathie Wood said in late May. A few days ago, news broke that Cathie Wood and her ARK Invest firm cashed in a portion of their Tesla stock holdings, with the EV giant hitting 8-month highs and up around 28% in June. At the time, Cathie Wood's ARK Investment Management sold 73,113 shares of Tesla for around $19.05 million, based on Tesla's closing price of $260.54. The Tesla sell-off was done through ARK Innovation ETF and ARK Next Generation Internet ETF. Notably, Tesla stock recorded 2 tiny losses and ended a record 13-day win streak the week before that. However, Tesla shares recently rose to a fresh 8-month high. As you all know, Cathie Wood has been buying up Tesla on the cheap throughout 2023 before selling big in recent days. On June 12th, Wood sold off more than 393,000 shares of Tesla for around $98.2 million based on Tesla's closing price of $249.83. Cathie Wood's funds purchased more than 1.3 million Tesla shares so far in 2023 and have now sold around 730,000 shares. Well, Cathie Wood surely is a star investor, buying stocks when they bottomed and selling them at their highs. You all know how bullish Cathie Wood is on Tesla. In fact, Wood referred to Elon Musk's Tesla as a big winner in the artificial intelligence race and said the stock was not overpriced. The ARK Invest CEO has long been an avid supporter of the car maker, making bold predictions about potential upside from a robotaxi boom. When asked if the EV company's valuation was too high, Wood shook her head. Right now, and we're in price on this, Tesla is at roughly $200. We believe that in 5 years, 2027, it will be a $2,000 stock if our research is correct, she said. In a CNBC interview in April, Wood said that she is unfazed by Tesla's operating margin drop, saying that ARK has a $2,000 price target for Tesla in 2027 and that the EV company's robotaxi plans will play a large role. ARK wants Tesla to scale its units, as each one represents the potential of a robotaxi or robotaxi fleet, Wood said. It is one of the most important investment opportunities of our lifetimes. One of the reasons for that is it is going to save lives. As you all know, Tesla plans to mass-produce a robotaxi in 2024, and ARK Invest believes the stock could grow at an explosive pace in the following years. In light of this, ARK recently published a valuation model that prices Tesla at $2,000 per share by 2027, which implies a 1,030% upside from its current price. That valuation model hinges on robotaxis, a topic that Tesla CEO Elon Musk recently discussed in an interview with CNBC. He said that full self-driving FSD technology would ultimately allow Tesla to sell cars for software margins, and that ARK Invest has the best analysis he's seen on the topic. ARK outlines 3 scenarios in its 2027 valuation model: the bear case that values Tesla at $1,400 per share, a bull case that values Tesla at $2,500 per share, and an intermediate case that values Tesla at $2,000 per share. The intermediate scenario assumes Tesla will generate $1.02 trillion in revenue by 2027, and that 44% of that revenue, or $449 billion, will come from robotaxis. For context, ARK's valuation model implies annualized revenue growth of 68% through 2027, which represents a material acceleration from annualized revenue growth of 49% over the last 3 years. I find that forecast wildly optimistic, and I say that as a Tesla shareholder, so it stands to reason that some investors will find ARK's valuation model to be utter nonsense. Here's the bottom line. Cathie Wood is clearly very bullish on the disruptive potential of robotaxis, and she has made prescient calls on Tesla stock in the past. It's also noteworthy that Elon Musk says ARK's valuation model is the best analysis he's seen. Of course, Musk has been overly optimistic at times, as he predicted that Tesla would have 1 million robotaxis on the road in 2020. But under his watch, Tesla has still become a leader in the BEV space with industry-leading margins. To that end, investors shouldn't be surprised if Tesla also finds its way to the top of the robotaxi market in the future. Tesla is the leading EV maker for a reason. The Musk-led company commands an extraordinary valuation compared to its peers. With a market cap of nearly $570 billion, Tesla is worth as much as the next 5 automakers combined. But the company is also running circles around many of its peers where battery electric vehicles (BEVs) and self-driving cars are concerned. Tesla led the BEV market last year, and its market share has actually increased during the first 3 months of 2023. The company accounted for almost 24% of BEV sales in March, while the next closest competitor held about 15% market share. More impressive yet, Tesla reported the highest operating margin among volume car makers last year. Musk attributes that success to manufacturing expertise. In fact, he says Tesla has the most advanced manufacturing technology in the world. Going forward, management believes it can maintain its industry-leading margins, and one reason for that confidence is FSD software, which can be sold at nearly 100% gross margin. Management expects FSD technology to be the most important source of profitability in the future. During the CNBC interview, Musk said it would allow Tesla to make 2 or 3 times the original value or sale value of the car in robotaxi revenue. On that front, Tesla is well positioned to be a leader in autonomous vehicles. The company has far more autopilot-enabled cars on the road compared to its peers, which means Tesla has far more training data for the artificial intelligence algorithms that power its FSD software. Musk also believes its cars are equipped with the most efficient inference computer, i.e. the supercomputer that runs the FSD software, in the world. In short, Tesla has more data and may have better technology, and it plans to capitalize on that advantage by mass-producing a robotaxi in 2024. In light of this, what can we expect from Tesla in the coming years? First, it is important to note that the performance of Tesla stock has seen a rebound this year, having risen over 50% by early April, which marked quite a turn from 2022 when the Tesla stock shed almost 70% of its value. A key factor that has contributed to the Tesla stock price's rise so far this year has been its price cuts. In January, Tesla lowered the prices of 2 of its most popular vehicles, the Model Y and Model 3, across US and European markets. It also helped make things better for Tesla when the company increased discounts on US inventory Model S and Model X vehicles by $2,500 a few days ago. Consumers can now get $7,500 off the luxury models after the EV company originally implemented a $5,000 price cut a few weeks ago. Meanwhile, days after Tesla increased US Model Y all-wheel drive prices by $250, the company now offers discounts of around $500 on some inventory vehicles. In a statement released by the company, they said, "Our focus on continuous product improvement through original engineering and manufacturing processes have further optimized our ability to make the best product for an industry-leading cost." Further, as we exit what has been a turbulent year of supply chain disruptions, we have observed a normalization of some of the cost inflation, giving us the confidence to pass these through to our customers. It is worth noting that Tesla has been a strong performer in the past. Although it has faced some difficulties in the past year or two, analysts are optimistic about its future. In a NASDAQ analysis of recommendations from 30 analysts as of early this month, Tesla had a buy recommendation. Those analysts gave Tesla an average 12-month price target of $198.54 with a high target of $280 and a low target of just $85. For long-term investors looking for a company that could deliver higher than usual returns, Tesla may be a good bet. But to limit the amount of risk you take on, it may be a good idea to diversify your portfolio by investing in index funds, mutual funds, or exchange-traded funds, ETFs, so your investment isn't reliant on the performance of a single company. Subscribe for more.